Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, January 2nd, 2019. We'll keep this one short. Not a whole lot to report other than what I covered earlier today in the previous midday update video or morning update video. We closed green today across the board on all the major indices. SPY here about 0.13, or I'm showing 0.12 on another monitor, give or take. QQQ up a respectable 0.41%, and the small caps even followed suit. A pretty strong day, up zero point 0.6 six tenths of a percent today. So again, and you can see here, I have my candles set to show um, opening versus closing value. So any green candle means you close the day above the previous trading session. So you can see on IWM now that's 6 days in a row of green candles. That's the first time we've seen that for a long time. It's certainly the first time we've seen six consecutive green closes since the top right here. I mean, we had a rally there that went longer than 6 days, but not with the 6 days green close. Let's not make too much over that. But the point being, this is a market right now in accumulation, and even more importantly, I think it's a market that doesn't seem to be in forced selling mode right now from the hedge funds, ETFs, some mutual funds that are getting hit, that were getting hit with a lot of redemptions, and were, just too heavy into the overcrowded tech and FANG trade. So, a few days again doesn't make a trend, but each day we continue on, it does. It is a start of certainly a near-term uptrend. And again, I wanted to make that mention that we closed green across the board today. Now, I did see a comment the other day. I made mention, what was it, Monday, that all that really matters is the end of the day close, and that's not 100% accurate. Somebody questioned, well, doesn't it matter what happens intraday? And yes, it actually does. So I'll go over that. Let's go back to these charts here. So you take ES, for example, and here, let's just go to NQ. That's my preferred trading proxy here. Let me find that one. Okay, so here's NQ, and again, the story, and I covered this quite a bit, so I won't harp on it too much. But we had these, textbook bearish rising wedges. This is just a beautiful bear food, and they broke down. And just as those breakdowns started to get going, they broke in last night's overnight trading session down into the morning. Just as it started to look like a good breakdown, we had a very sharp and powerful reversal that took prices back above the point of the breakdown. That means every trader that waited for that breakdown and short afterwards was smoked at some point today, and they were forced to cover. So that's the bear trap scenario laid out, and it's so far so good. Now there's still work to be done, and by that I mean we still have the negative divergences, because today's high, we eked out a marginal new high, went just above that previous reaction high there, and so that keeps these potential divergences intact. But as I said last week, there are times where I will put a lot of emphasis and trade around those, and try to profit on, and go short for a breakdown that could go a lot further. And we can't rule this one out yet. I think we continue to go up from here. Whether we have a red close tomorrow or not, I think there's more upside before we break these lows. I think we have considerable more upside in the coming days to weeks and possibly months. And I'm still looking for at least these targets here, with a preferred swing target right now around 65.53 in NQ. If we continued up a little bit more, and I can move that trend line right there. So it was pretty much a back test there. So again, this would give, if you are bearish right now and you think we're going a lot lower, I can tell you that this run up to that high today to backtest that trend line was an objecting shorting up. And in fact, we did short it. I'll get to that in a second. I pointed that out on the site today. Public post, even YouTubers, you have to come into the site. If I do a video, that goes on YouTube, but I share public content if it's general market analysis on the site. You just have to check the site for that. We'll get to that in a second. So we also ran into resistance there on the futures, and I'm going to get to those charts in just a second. But what I wanted to loop back to was, yes, intraday price action does matter because it tells a story, and this story was that breakdown. It was impulsive, everything you want to see, and then followed by a big reversal. So it shows me, number one, that right now the sellers are no longer in control. At least they weren't today. Again, one day doesn't make a trend, but as of today, the shorts and the sellers got smoked. The buyers won. They took that reversal, and this from high to low was, I believe, a 4% rally in the NQ, the NASDAQ 100. So low came a little before the market opened today, early morning, and then from low to high, that was about a 4% rally. So pretty powerful stuff. And again, it just speaks to the supply demand dynamics right now, and tells me that at the very least, for the past week or so, the forced selling that we were seeing for weeks, several weeks leading up to that, is not happening anymore. And right now, the market is in accumulation mode because every day we keep closing the day green, as I just showed you. So let's just look at a couple more charts. That was NQ. And similar story on ES. And again, we did run into resistance, and as mentioned, I pointed that out in the trading room. Then right after that, posted an update on the front page. So this is a level we have to break out, today's highs, and that's what I mentioned. That will be our next buy signal to take out today's highs. And if you're a QQQ or SPY trader, just use today's highs, inspire QQQ. If you trade futures, you can see it here. And again, that's why I use a future. So let's just go look at that post real quick. Let's see if I have it up here somewhere. That's the chart I was going to show you. And here it is. Let's go to the right side of the chart. The posts are down here. I scroll down a little bit. And so this was the one posted this morning before we opened, 9:12 a.m. by the time this one was taken, got out there. The charts were screenshotted a little bit before that, about 8:55. And there I showed my scenario that everything, all the makings were there for a nice bear trap. We had the breakdown of the wedge. We had a little bear flag forming, if you can see that right there. There's your bear flag. What bears saw, if they saw what they wanted to see, was a breakdown, a bear flag, and if that bear flag would have played out, there would have been another sharp move down, roughly equal to the flagpole. And instead, the opposite happened. As expected, we rallied from there, and we haven't hit my targets yet, but we're getting close. So. And same story in ES, you can see the bear flag there as well. Of course, it didn't play out. It was a potential bear flag. As with any bear flag, it's only a potential pattern until you trigger a sell signal on this one, and that would have been an impulsive move down out of the flag. But even then, even if we had an impulsive red candle out of there, my expectation would have been the same. So if we broke down, we would have probably just reversed afterwards. But either way, we didn't, and that's where we're at now. After that, I posted the midday market update. If you're watching this on YouTube, you already watched that video probably. And then this afternoon, just before 2 o'clock, posted the fact that the futures were at resistance. I used some different charts here, but you can see that. There's the resistance level. This is NQ, about 64.05 right there. Pretty decent level. And I showed you that a minute ago on the other NQ chart. So actually what I had here is triple resistance, and that it's hard to really stay long or not short. So I mentioned in the trading room that what I did is at that point I put a very tight stop on my position, and then right after that stop was hit, and I then turned around and shorted NQ. And these arrows aren't to scale, but that's what I was expecting. So we were able to, quick traders, and I said it in the notes. If you're a swing trader, an investor, you're long anywhere from here to here to here, any point, that I wouldn't be overly concerned. It was just more of a technical pullback. Again, triple resistance, price resistance right here, the horizontal line, the back test of the uptrend line right there, and the running into the downtrend line as well. So on a scale 1 to 10, it doesn't get much better than that. You have 3 intersecting resistance levels, and a pullback was likely. And I also showed it here on the ES. This is the S&P 500 futures. Again, you can see it's not triple resistance here. It was on NQ, and the pullback was a little stronger, but there was very solid resistance there. And of course, you had this uptrend line. It was a near back test of that, so had us pulling back and then continuing up. And I still think that will be the case. However, I showed you the potential negative divergences, and what I mentioned on the site to members is that if the next objective long entry will come on a pop above really today's highs, because we failed at those levels. So as I said earlier, pop above today's highs will take us above that resistance level right there and put all that in the rearview mirror. So that's what we'll be looking for tomorrow. Maybe it happens overnight tonight in the futures, but as I like to say, resistance is resistance until and unless taken out. So what I said there, it would not be objective to add at that point, to add any long exposure. You either want to wait for a pullback maybe to the bottom of this range here, or break out above that level. and then that should open the door for a nice move up here at about 26.26 on that's the ES. So again, those were the charts from earlier today, and then just to update that and show you what happened. There it is. We have to zoom in pretty tight here, but you can see there's the pullback, and it wasn't huge. That was this is ES. Let's look at NQ. There's a pullback. Try to measure that out for you real quick. From high to low, the pullback was about 1.25%. So it's definitely worth, if you trade, if you trade NQ, I don't have to tell you how much that is. It'll put you, over $1,500 in your pocket if you got the whole thing. But even to get a half a point, or a full percentage point on NQ on a pullback trade, or to sidestep those givebacks and then jump back in, that's what I did. And tomorrow, if we take that out, then I'll add back to the full position. Trade it. Today was both a day trading day and a swing trading day. So I have some positions here that I bought this morning, and I took half of it home tonight, and I day traded around that as well. So we'll see if something pops overnight, maybe jump back in, but otherwise we'll wait and see what happens tomorrow. And guys, remember this too, that the futures are whippy overnight in the overnight session. You don't have all the players on the field. The big institutions, they come in at 9:30, and that's when they start to play. They walk on the field right when the opening bell rings, and that's what happened there. So when the opening bell rang, boom, that's where the institutions stepped in, and that shows me institutional buying and accumulation. So let's not try to read too much into it, but again, we are at a pretty important resistance level. And we could consolidate, we could pull back, but we've had quite a bit of consolidation under that level. So I think it's ready to pop if it wants to, and I wouldn't be surprised to see that happen tomorrow. And let's just wrap this one up with these 60-minute charts of SPY and QQQ for you ETF traders. There's a downtrend line again. So there's, a cross current here of technicals. We have the downtrend line, which we broke out and back tested. So here's your breakout right there. Back tested and started to rally. And then we also have this uptrend line off the lows, which made a mess of that one. Let me try it again here. So we have the uptrend line off the lows. Well, you can see it there. Which we broke down, and we're back testing that from below. So again, like I said, you can and will take this market or trade this market however you see it. Bears see it glass half empty and see this as a breakdown of the uptrend line and a back test, which we may soon roll over, and that's certainly a possibility. If we do watch the downtrend line, we may come in at lower levels and test that. We've come up quite a bit recently. And if we take out the highs, as I said, you can see that it showed better in the futures. That's why I started there. The recent reaction highs, you only have a couple reaction highs here on the SPY 60-minute chart, because a lot of those reactions on the futures happened outside of regular trading hours. But either way, that's what I'm looking for. A pop above there to open the door to move up. Next resistance on SPY 253.50, give or take, and then up here to my preferred swing target before all is said and done. And all said and done means, I don't know, maybe we come back in, maybe not. But all I can tell you right now is a pop above that level should open the door for a move up to 262 or so. So maybe we pull back first, maybe not. Anything much more than that, let's just try to throw up some fibs on this move so far. Pull back at this point. Here's your 50% Fibonacci retracement, and there's also some very mild price support there. We had a couple reactions, so ideally I'd like to see any pullback contained at that 50% fib, and then below that you have the 61.8% Fibonacci retracement. Here's that PPO, which looked poised to make a bearish crossover, but as I suspected, that might be foiled, just like it was in some of these back here, and there's one right there. So far they foiled it. They didn't make the bearish crossover. And we don't have negative divergence on the 6. Well, we do have some divergence on the RSI, slight divergence, not very much, but again, let's just see what happens from there. We'll take it from there. Tomorrow, we'll take it as it comes, is what I mean to say. And there it is, same story. We had a brief crossover, but they foiled that on the PPO, brief bearish crossover, and sort of a similar story here on QQQ. You can see the downtrend line right there. You can see the breakout in the back test, everything I covered this morning, and a thrust up, but you can also see a breakdown and a back test of this uptrend line. it's pretty much it's noise right now. It's consolidation over the last few days. So let's see which way we pop above this recent range. I still favor to the upside and a move up here at least 160.20. And we'll just have to assess things from there. All right, we'll wrap it up here. This has been Randy Finney with the right side of the chart. Hope you enjoyed it.